To find out all the breaking news today for you. First and foremost, right here, new and odd filing just now in the SEC versus Ripple docket, an emergency request to present decisive evidence in favor of the defendants and in favor of liberty for the American people. The letter from a man named Justin Keener doesn't make clear what the so-called decisive evidence is or how it would benefit Ripple, but hints it is something to do with the physical investment contracts he's been collecting. Looking further into Keener, though, it looks like SEC recently sued him for being an unregistered penny stock dealer, for which a court has ordered him to pay over $10 million. But is this positive news? Could he have some sort of special smoking gun that could help the Ripple team? We will continue to keep you updated on this as it evolves. And we'll talk about this a little bit more in the details of one of the articles we're covering today, but we're excited to announce Coinbase Institutional. The Coinbase derivatives have filed with the Cftc to self-certify XRP futures, bringing a regulated, capital-efficient way to gain exposure to one of the most liquid digital assets. We anticipate contracts going live on April 21st, 2025. Stay tuned. So that means this month, less than 3 weeks away, we are going to have futures contracts for XRP on Coinbase Institutional Trading. Just in, the U.S. stock market records its worst day in 4 years. Also just in, SEC acknowledges filing for Fidelity's spot Solana ETF. So what's really interesting is, yes, we are having some major shock going on in the markets because of the tariffs. The uncertainty at first was making everything go up and down, not sure. Tariffs hit us instant. Essentially, a nuclear bomb went off on the financial markets, but the bottom could be in, so we're going to continue following that. Once everyone starts to understand how these tariffs are going to actually impact the financial stability of the United States, the financial stability of companies all around the world, we'll get back to business as normal. Right now, some people are saying that they are just trying to punish Trump because, remember, a lot of these major corporations do business all around the world. They have offices and manufacturing plants all around the world. So they're also very, very upset. The people that have billions of dollars, the BlackRocks, the Citadels, they're selling off shares because they want to bring the market down. And as we saw in the kickoff of the video, the famous video of Brad asking the IMF if they will hold XRP, the reaction says it all. The grand plan is happening behind the door. And one of the coolest things that I found scrolling on X so far, go follow Layer GG Official at Layer GG Official. They have a crypto calendar. So 2025 crypto calendar for April. Today being April 3rd, you may be watching this on April 4th, but take a look at this. Thursday, April 3rd, U.S. initial jobless claims come out. We're going to be hitting on that here in just a moment. Coinbase International FAI perp listing, and they also give you token unlocks here. 117 million tokens were unlocked today, and that is the Wormhole unlock. Wormhole is the leading interoperability platform connecting traditional finance and the internet economy. They have the visual display that you can take a look at, but also when you click on the page here on their actual X post, it gives you all of the details of what went on. So today on the 3rd, the initial jobless claims came out. Coinbase International, BNB, L3, FAI perp listing, we just covered that. And then, of course, the token unlock. Now, tomorrow, the Fed Chair Powell speaks. U.S. unemployment rate comes out. U.S. non-farm payroll comes out. And then looking into the future, Rune Thorchain version 3.4.0 will be coming out. And the reason I really like this is because of the fact that it has a lot more crypto-centric information. It still covers the traditional news. And speaking of financial news, you need to know about this as well. The 10-year treasury yields have now fallen to 4% as the Dixie softens. Is it time to buy Bitcoin with this price dip? Will the U.S.-led trade war lead to a golden buying opportunity in Bitcoin price or further downside in the short term? On April 3rd, yields on long-term U.S. government debt fell to their lowest levels in 6 months as investors reacted to growing concerns over the global trade war and the weakening U.S. dollar. The yield on the 10-year Treasury note briefly touched 4%, down from 4.4% a week earlier, signaling strong demand from buyers. So what is happening right now is a lot of people, and you're seeing this, are exiting out of their risk on assets, such as cryptos, such as individual stocks, such as indexes in the stocks, S&P 500, NASDAQ, and so on. And they're taking that cash and they're buying bonds because of the fact that these are going to bring in no matter what returns, as opposed to losses from the risk on assets. So these are more risk off assets. Because so many people are flooding in and buying so many of them, the interest rate is actually dropping. The rewards for the purchase of the bonds is dropping. At first glance, the risk of economic recession may seem negative for Bitcoin. However, lower returns from fixed income investments encourage allocations to alternative assets, including cryptocurrencies. Over time, traders are likely to reduce exposure to bonds, particularly if inflation rises. As a result, the path to a Bitcoin all-time high in 2025 remains plausible. So what they're saying here is right now it's sitting at 4. It was 4.4. So you were collecting 4.4. So many people are buying these bonds now. You're only collecting 4. When it goes down to 3.5, now you're only collecting that. When it goes down to 3%, if it ever gets down to those levels, right? So 3.8, 3.6, continue on down. If it gets to those levels, then it's not even worth putting your money in to these bonds. Even if it's guaranteed returns, it's worth finding a potential hedge against this that is a riskier asset. And they're saying it could be the Bitcoin. Tariffs could create supply shock in the United States on regular goods and impact inflation and fixed income returns. One could argue that the recently announced U.S. import tariffs negatively impact corporate profitability, forcing some companies to deleverage and in turn reduce market liquidity. Ultimately, any measure that increases risk aversion tends to have a short-term negative effect on Bitcoin, particularly given its strong correlation with the S&P 500. And as we see here, Axel Merck pointing out, the U.S. is pricing in more rate cuts right now. You might say this isn't surprising, but keep in mind that the tariffs are a supply shock with less supply. If you boost demand with lower rates, you'll get inflation. So what that means is if we don't have products to buy, remember like COVID, right? There wasn't wood to buy to build houses. There wasn't electronic pieces to build computers, whatever the case may be. But at the same time, interest rates were really low because we were flooding the market with money. So supply and demand were unequal. There was a huge demand because supplies were not very much readily available, but there was also huge amounts of money in the market, making prices go up like crazy. So supply and demand got a little out of whack. And what they're saying here, we got the May, June, July, August, October, and December meetings that they'll be holding, and the potential of a rate cut, implied rate going down to 4.25. It's currently sitting at about 4.5, then going down to 4.01, then 3.92, 3.7, 3.6. So we're talking interest rates potentially coming down into 2026 back to 3%. Even if one does not view Bitcoin as a hedge against inflation, the appeal of fixed income investments diminishes significantly in such a scenario. Moreover, if just 5% of the world's $140 trillion bond market seeks higher returns elsewhere, it could translate to $7 trillion in potential inflows into stocks, commodities, real estate, gold, and Bitcoin. And, you know, it's funny we say 7 trillion like it's such a big deal. There are reports that over the last week, we've lost $2 trillion worth of money in the stock and crypto markets combined. And the other interesting part here is gold is becoming strong, getting into all-time highs, and the US dollar continues to weaken. So gold's surged to $21 trillion market cap as it made consecutive all-time highs, and it still has potential for significant price upside. Higher prices allow previously unprofitable mining operations to resume, and it encourages further investment in exploration, extraction, and refining. As production expands, the supply growth will naturally act as a limiting factor on gold's long-term bull run, which is interesting, right? Because there could potentially be an unlimited supply of gold if you find different gold deposits around the world, as opposed to with the digital gold or Bitcoin, we know that there's only 21 million. And that's what everyone talks about of why there's a potential more power behind Bitcoin as a reserve asset versus gold itself. Regardless of trends in the US interest rates, the US dollar has weakened against a basket of foreign currencies as measured by the Dixie index. On April 3rd, the index dropped to $102, which is the lowest level in 6 months. A decline in confidence in the US dollar, even in relative terms, could encourage other nations to explore alternative stores of value, including Bitcoin. And as we've seen, the United States now has the Bitcoin reserve. Other countries are starting to talk about having their own Bitcoin reserve. So if we're getting to a point where Bitcoin is a good leverage against all of these other options, and the prices drop to an affordable rate for some of these other people that were buying at 108,000, now we're down at 83, 84,000. It's more affordable. We could see a huge surge into. This is me being optimistic, of course. Obviously, the markets are looking a little shaky right now, but all it takes is one little spark, and we start to see some bullish momentum, and we could have an absolute moonshot. And they go on, while no one expects to return to the gold standard or Bitcoin to become a major component of national reserves. I don't question that, though. I think that's definitely a possibility. Any movement away from dollars strengthens Bitcoin long-term upside potential and reinforces its position as an alternative asset. To put things into perspective, Japan, China, Hong Kong, Singapore collectively hold 2.63 trillion in US treasuries. If these regions choose to retaliate, bond yields could reverse their trend, increasing the cost of new debt issuance for the U.S. government and further weaken the dollar. In such a scenario, investors would likely avoid adding exposure to stocks, ultimately favoring a scarce alternative like Bitcoin. Timing Bitcoin's market bottom is nearly impossible, but the fact that the $82,000 support level held despite worsening global economic uncertainty is an encouraging sign. And we also saw that in the total market cap of 2.6 trillion, instead of it dropping down below 2.5, it was holding at 2.6. We need to hold that as well. So they're talking about a support of Bitcoin at 82,000. We really need to hold the support for all of the crypto total market cap at 2.6 trillion and move up from there. Now, in a pick for the SEC chair makes it out of committee, U.S. lawmakers in the Senate Banking Committee voted to advance 4 of President Trump's picks for crucial government positions, including the SEC chair, Paul Atkins. On April 3rd, an executive session for the Banking Committee, lawmakers voted 13-11 for Atkins to serve 2 consecutive terms as the SEC commissioner, taking over for Gary Gensler's term ending June 2026 and another term ending 2031. Before calling the vote, committee chair Tim Scott said Atkins would bring much-needed clarity for digital assets. Ranking member Elizabeth Warren reiterated earlier concerns about Trump's picks helping billionaire scammers like former FTX CEO Sam Bankman-Fried and Tesla co-founder Elon Musk actively trying to destroy federal agencies. Like, dude, Elizabeth Warren is crazy, man. She has some wild conspiracy theories. The committee also advanced nominations for Jonathan Gould as comptroller of the currency, Luke Pettit as assistant secretary of treasury, and Marcus Molinaro as federal transit administrator. The majority of the Democrats on the committee were not present April 3rd, when Senator Warren acted as the proxy for many votes. But the news that really matters today is Coinbase Institutional has big news for XRP holders. Coinbase has filed with the CFTC to self-custody futures contracts for XRP. The exchange revealed that it would go live on April 21st, and Coinbase Institutional also indicated that future details regarding launch timelines and availability would be shared.